Hello, I'm Richard Hunter, Head of Markets, and welcome to our look ahead for the week commencing the 20th of September. It's been quite a torrid week for markets in terms of actual movement. They're more or less flat, but there's been a great deal of economic data coming through, on both sides of the pond. In terms of the outlook from here, there are still some concerns on economic growth and whether the recovery is being sustained. At the same time, in the States, there have been some worries about the effect that corporate tax hikes could have on company profits. And of course, the supply chain disruptions and labour shortages we've been seeing might also, alongside raw material price increases, have some kind of impact on the third quarter reporting season, which of course will start a few weeks away at the beginning of October. In terms of the week as a whole, there's been a similar set of economic releases in both the US and the UK. US inflation figure were rather lower than expected, giving some hope that perhaps the Federal Reserve has been right all along and that inflation may well have peaked. At the same time, the retail sales figure was fairly strong. That's despite Hurricane Ida and the Delta variant outbreaks in the States, which means that the US consumer, who contributes something like 70% to the US economy, is still in rude health. So in terms of next week, of course, we've got the Federal Reserve interest rate policy decision, when all eyes will be on its latest views on its tapering decisions. In terms of the UK, a very similar picture. Inflation figure did actually spike for August, although there were a couple of comparisons within the figure which will drop out, most notably VAT being put on hold in certain industries, but also, of course, the Eat Out to Help Out scheme was still in full flow last August. That being said, inflationary pressures remain, again, in terms of supply chains and so on. Retail sales in the UK, probably slightly lower than expected. That being said, they're now above pre-pandemic levels. But again, we've got things like the end of the furlough scheme and those supply chain disruptions, which will keep the pressure on. And similarly, the Bank of England's Monetary Policy Committee will be giving its interest rate decision next week. So in the year to date, the Dow Jones currently up 13.5%, S&P 500 up 19.1%, the Nasdaq up 17.8%, and the FTSE 100 up 9.2%. Still fairly quiet on the corporate front next week, although there's a couple of FTSE 100 companies reporting which are worth keeping an eye out for. The first one, half-year numbers from Kingfisher. This is the owner of B&Q and Screwfix. Shares up about 32% over the last year. Obviously, there's been something of a DIY craze during the pandemic. So the question is whether that craze is continuing or whether the easing of lockdown has actually got people out and about more and perhaps doing less of the DIY. And again, those supply chain issues potentially may have an impact on the figures. Having said all of that, this strong share price performance has been driven by the fact that the last time we heard from Kingfisher, they were actually upping their profit guidance. And traditionally, Screwfix has been something of a jewel in the crown, so it's worth keeping an eye out for that part of the business's contribution. There's also a trading update from the food service company Compass. That shares there up about 14% over the last year. When we last heard from them, they said that sales were running somewhere like 80 to 85% of pre-pandemic levels, so we'll see whether there's been any improvement there. Obviously, the easing of lockdowns may well have given it some more opportunities in terms of outsourcing and also contract catering, and also in this particular business, very important to keep an eye out on their operating margins. Thank you for watching. Have a great week.